Great Depression 2.0, billionaires still selling. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard. Today, welcome back Sam, who's been noticing still more billionaire selling going on that he's been reporting back to us recently, as well as concerns around money supply drying up in the US. So how are you going today, Sam?
Great, Chris. Good to be back.
Yeah, good to have you here. So the article today, lots of bits I found it really interesting because I love the global liquidity stuff, and we'll talk a little bit about that. But there was a lot there around this selling that's going on, and that's caught my interest as well because it seems like there's sort of two tales going on. It's interesting to me because I did that report on global liquidity a couple of weeks ago, and was sort of arguing there it's on the rise, and it does appear that that's the case. But the article you wrote today is talking about shrinking liquidity, and of course, liquidity is a big part, or money supply specifically is a big part of global liquidity. So if that's shrinking, what's going on there? Why have we got this sort of disconnect between what both of us are saying?
Well, there's a difference between global liquidity and this sort of localized liquidity, which is just looking at M2, which is just looking at the US as well, which does make a big difference. But I think the main difference is it's really a certain section of the population of the world that's being squeezed for money. As it's quite apparent, China's been increasing liquidity, trying to bolster their economy, doing all sorts of stimulus to try to, keep things from falling apart. Whereas the U.S. has been quite tight. Business conditions have been very harsh, especially for small businesses. And when it comes to liquidity, it's just good to remember where is the liquidity. So if you think about liquidity like water, Australia has a lot of water, right? But if you're in the outback, it doesn't make too much difference. You can die of thirst. So where that liquidity is really matters. And some of the things I covered in my article are about, businesses not being able to pay for their debts, people not being able to pay for their mortgages, things like that. And it's hard to get liquidity in certain parts of the economy. And that's the thing that's going to potentially lead to this situation like the Great Depression.
And I really like that explanation because it highlights that the two things can be correct at the same time. We can have global liquidity increasing, and that's certainly the examples you used, like out of China, for example, that's a really big player. But when you're talking about global markets, we can't ignore the US, and that's really what we're looking at here, that M2 out of the US. That localized situation is really quite problematic, and we can again have both those things happening at the same time. So
so since the peak in April 2022, the money supply shrunk by $2.8 trillion. And proportionally, that's the largest fall in money supply since the Great Depression. So just to give an idea for the regular US consumer, that's how difficult things are getting.
Yeah, that's a really important point because the scale of that is just massive. So turning that to then talk about what these billionaires are doing, because as we said last time, you can't ignore when the biggest names in the space who've made all their money from trading these markets are taking action. You're highlighting again that we've had large sell-offs in shares from Jamie Dimon, Jeff Bezos. You're tracking some developments on more billionaires who are selling as well. Can you give us a bit of background about what's going on there?
Yeah, well, Mark Zuckerberg has joined in. So he's just to give you an idea, he hasn't sold Meta shares for the recent 2 years, but this year, according to Bloomberg, he's sold shares in Meta Platforms Inc. almost every single weekday. So maybe that's his dollar cost averaging strategy, but then you have to ask why. Why is that, and why is it this year that he's selling his own shares every day? That's quite worrying. And then the founders of Google, they haven't sold since 2017, and so Brin and Page, they began selling off their shares in May. So quite large sell-offs. And then most notably, very recently, we have the Walton family. So if people aren't familiar, that's the Walmart family. Lots of billionaires, basically all billionaires in the family from Sam Walton's fortune. And they've been selling their shares. So we had Alice L. Walton just sell 263,500 shares just late last month. and that's a total of almost $41 million. And then we had Jim C. Walton selling 420,000 shares, which is $65.5 million. So these are massive sells happening in one big hit, which makes you think, well, why would they sell just in the last week or the last couple of weeks? Do they think it's not going to go up anymore? Well, obviously, if they thought it was going to go up more, they would sell next week, right? So,
yes,
in total, this is according to Bloomberg. In total, the richest Americans have sold 42.9 billion of stock this year, and that's more than double what they sold in 2020. Keep in mind, 2020 had that crash, this huge sell-off. That's where it was a sharper sell-off than the Great Depression. So even the year containing that sell-off, the sell-off in shares this year is more than double that, with people who are considered, richest with millions of dollars in America.
That's extremely interesting. I think I'd like to go back specifically to those to two of those, the Google one and the Meta one with Zuckerberg and the Google founders, because I'm just looking at what's coming out of there, and you would think that they would be very bullish on their companies, on what they're actually producing. I mean, they certainly seem that way. Google today, I'm just blown away by the AI release that they've had come out, Gemini, that this new sort of background is just amazing. And you would have to think that that's really putting Google on the front foot in terms of a company and what it's doing. But the shareholders or the owners there, I think you're effectively saying they're not necessarily saying because they don't think they're nailing it in terms of their products, but it's really just this concern about the market generally, and it doesn't matter how good what they're producing is, it's not going to overcome the pullback that they potentially see.
And that's one of the things people are having a very traditional look at share valuations. They're saying, oh, this is going up because they have great products. Not necessarily. A lot of these things are going up because big institutions are just looking for pools of liquidity that they can do momentum trades in.
Yes.
If you have $1 billion sitting there, you're not going to go in some small share and dump it all in and then not be able to exit or lose your money. You're going to hunt for a really big school of fish that's going this way and that way, and join in and try to ride it up and then pull money out. And then, of course, some people end up as the exit liquidity, a lot of retail and things like NVIDIA and all these major companies. But they're just doing these momentum trades because money always needs to be doing something. And they're jumping in on these ones that have confidence behind them, that retail traders have confidence behind, and then they're pulling out whenever it swings upwards. So it's not just necessarily due to them coming out with a new product.
Absolutely. And I think that's leads in quite nicely to this idea of volatility. We've been talking about a lot that when you talk about being someone else's exit liquidity, that's really important, because we can have all of these things be correct at the same time. We can have great products coming out. We can have lots of things going on in the markets and the financial system itself, really creating us whipsawing all over the place. And the people who get hurt the most are the people who don't know what they're doing. And you would generally think these billionaires do know what they're doing, because that's how they ended up with $1 billion, right? So it's quite important to understand how all of that pieces together. To wrap this up, I saw that chart and I thought we could dig into that a little bit deeper on the M2 money supply, because if you look at it, it certainly has gone down exactly as you were describing. But if you compare it to where we were before 2020, we still look so high. So I think this gets to the crux of the issue around a lot of the turbulence that we're going to experience. How do we rectify that? How do we have a situation where we're still well above the trend that it looks like on that chart that you posted, but where we are in the cycle, is there room? Like if the market starts to fall, what happens? Do they pump even more in? How do you read all of this?
It's hard to look at traditionally because, and this is just off memory, but I believe since 2009 until now, the money supply's increased about 183%. And I think roughly a quarter of that came from 2020 or post-COVID, the big liquidity increase. So people are saying, oh, inflation should be going down now because the M2 is reducing. And Joe Biden famously got called out online. He got community noted. He was saying inflation is back down, to 3%, and corporations need to stop gouging consumers. Although what he doesn't realize is it's a positive number, which means inflation's still increasing, just at a slower rate. So it's not gone down at all. And one of the major problems with that rapid increases you can see on the chart where it actually left the trend line is, okay, we crawl back towards that trend line, maybe go sideways and try to get it to a regular sort of out of control increase, which it's been on for 100 years. The problem with that is, once it's taken off so aggressively, the prices have already risen. The inflation's already there, and all that money's been absorbed. So reducing it's still going to do a lot of damage. The only way I can explain it is like saying, okay, you have one coffee a day, but if you're used to having 4 or 5 coffees a day, now you have to go back down to 1, it's going to be very painful. You can't say, oh, well, this is just back to where it was before. It doesn't matter. All that liquidity has been absorbed and taken advantage of. The overall health has gone down, and now you're going to be really tired as well once this happens. So it looks like the prices are going to remain high for a while. There could be a pretty bad recession, as these articles I referenced are calling for. And there's no easy magic bullet or magic pill to get out of it.
Well, let's just see what happens, whether we get the regular out of control, whether we can get back to the regular out of control, or if we're in the, I don't know, exponential out of control, that who knows where we end up. It's all a bit of a mess, really, but we'll keep paying attention anyway, and we'll keep talking about it. So thanks for that today, Sam.
Thanks, Chris.
Thanks, everyone, for watching, and we'll chat again soon.